setups that I have throughout the week. Um, the risk to reward ratios in all of these is quite high, and we should have a very profitable week. So let's begin. As you can see from the screen, the first setup is obviously for IREN. Current structure is looking a bit weak, and I know lots of people aren't really proud of that and are almost losing hope. But the thing is, this is a very classic wave pattern, and I think this has the means to rally pretty soon. So, before I begin, please subscribe, like this video, follow me on my Twitter account. That's where I do most of my posting. So I have a lot of setups for next week, and I'll be on occasion posting them or sharing live updates on how they have performed. So, you know, do follow, do help me grow, because I really want to be a full-time trader here on YouTube. Um, okay, so for this setup at current market price, if we extend this towards here, so we currently have around a 27% upside. Now where will our ideal stop be, right? If this was a break of structure, right, and hence this was the other break of structure, our stop should probably be on a daily close below this level, which is around 51. So let's take 50 to be exact, right? So that we're kind of in the even numbers. So let's take input plus 50. That's psychological numbers. I am pretty sure bulls on IREN will try to defend this heavily. Uh, the buying price is Friday's close, and then you have targets set at around 75 to 76, basically the previous all-time high. Obviously, my overall target for IREN goes to between 87 to 100, and that's mainly due to the fact that um, this was wave two, bottomed out right around here, and then we have wave three, and then this was the bottom of wave 4. So between 87 to 102 is my long-term holding. I have a lot of shares on IREN that I will sell between this range. However, for the contracts I'm holding, I have 70 expiration for 17 July. So when you put in the premiums that I paid, it goes around 80. So hopefully they will go above 80, and I'll probably be selling them around 87. So more or less $700 gain per contract. So that should be a good thing. Yeah, so 45% upside, that's pretty good. Uh, but for now, just for next week, this is my risk reward ratio and my target if I were to make a fresh entry, which I'm highly suggesting most of you guys do. Then the second stock on our radar is IGV. Now, all of us know with the AI sector plays, most of these semiconductor tech stocks, they have come down, right? Positions such as Microsoft, Oracle, IBM. So they're due a bounce. So this was the change of character right around here. Also, you can see over here, this is previous resistance. Price action tried breaking it here, then here, then again here, and then eventually closed above it. And you can see there was a retracement back before it ended up going higher. So I'm not sure whether it will go on and make a new higher high, or if this was a false breakout. However, because we're unsure of that, we can anticipate that what previously was resistance here, even here is now support. And because this is support, price usually likes to go to the zero point 0.5 to the 0.618 fib level, and that can basically be our selling zone. So you can actually take a long position at current market price, target anywhere between here. 100 is a good round number, a 12% gain. Your stop should ideally be below these lows. So anywhere between 85, let's just take that as a round number. So the risk reward ratio is quite high, but any closing below this low would negate this bullish structure basically. So let's take 85 to be safe, right? Yeah. So 85 is our stop loss. Our target is anywhere between 97 to 100, and that should be a good risk reward ratio for this. Then we have Netflix. Now on Netflix, again, the stock has been incredibly beaten down. It's become one of those forgotten names. I remember before the stock spread, Netflix was trading around somewhere around 1,000, and from then on, ever since they announced a deal with, they wanted to buy Warner Bros. It's just been coming out from here. So lower low, lower high, consolidated, new lower low, lower high, lower low, lower high, and then this was a lower low, and then a lower high. Now you can see that price made has taken support from these levels, right, twice. And usually price action does take support 2 to 3 times before it eventually ends up breaking that, right? So based on simply probabilities, I would expect the price to bounce from here. And again, as with the previous IGV trade, price action usually tries to go between zero point 0.5 to 0.382 in this scenario, and from there onwards we can expect resistance, right? Also, this is the lower low, so this should be previous support, right? It took support at this zero point 0.5 of the entire structure. So this area should be a major resistance. I might not go for the 95 level and will probably think of resistance being around here. So this should be a good setup. I would do my buying anywhere between 75 to 76. However, I will wait for one candle close, right? And by that I mean one candle close in the green, so that this makes sense. And basically any close below this, there will probably be a wick made, so you can use 70 as your stop loss level. So any close below 70 would mean that the bullish structure is negated. This on Friday did end up closing again. So if you want a dollar cost average, you can do your buying pre-market in case it directly ends up going higher. But just in case it comes further down, or if there is a wick made, um, try to wait for a closing. If the market closes above this level, above 75 to 76, 76 to be safe, and the candle is green, you can anticipate it going a bit higher, touching this resistance before falling. Price usually does this because zero point 0.5 is the major resistance, and this is just a premium to be in. So for optimal trade entry, this is the zone. Because Netflix overall looks bearish, right? The on a larger time frame, Netflix, you can see on the weekly it went down, lower low, lower high, and then it should again go down, and it should go down a lot, right? um so this is a good support level, so support around 67. And let's use the fibs just in case it is in an elite waves pattern. Yeah, so if it is in the elite waves pattern, it should find support at 60 to 41, and this is where we would consider Netflix to be in a discount zone. And by discount zone, I mean whenever something is in a discount zone, you buy it and hope that it will rally, and not necessarily hope. That's the optimal trade entry. And right now, again, Netflix is in. If Netflix rallies to anywhere between these two levels, we can assume it to be in a premium. So if you want to buy put options, you may. And even currently, because the call options are so cheap, you can get call options for 75 or 76 strike price, and then sell around 90. So you're gonna be in a lot of profit whenever that happens. Yeah. What else? And then we have VZ. So both the credit card companies, their Reason, and we have Mastercard. they're not doing pretty good. Again, market loves these semiconductor plays and stuff. It's right at that 200 exponential moving average. So and it's the Bollinger Band. Yeah, yeah. So it's not. It hasn't touched there, but we can see this is support twice, and it's in this wedge. As long as it does not close below it, this is the optimal trade entry. And as I've explained um in the previous two stocks, this can go higher. So I would want you to either buy it around here and then wait for a breakout towards 48 to 50. Um, and then just keep your stop loss anywhere below this area. So, you know, what's a good risk to reward ratio? Maybe 43. Yeah. Yeah. And right here, this was resistance. Maybe it was resistance somewhere back here as well. See, resistance here, price action tried breaking this. This was just a liquidity grab before it went further down, and then it tried to rally. Ideally, if this breaks this wedge, your target is not 48 to 50 because price action can go higher. And what I mean by that is, when we do technical analysis, I have to measure the low from here towards the highs and place it right at the breakout zone. So we will be in that pattern. So ideally, you can imagine price going to the 0.618 Fibonacci level, which is around 56. But that's a long-term target. Right now, do your buying here. This is a great setup. I think Verizon has solid attendance. It's not in the AI names, hence it's not as as so market is not buying it a lot, so it's not retail's favorite. Something like Micron or SNDK is, or even Intel, but you need these companies to facilitate all those AI transactions, and that's where we are. And now we have DoorDash. So Verizon hadn't broken out. DoorDash has. It has broken out. It then confirmed, retested the breakout, and then it has rallied higher. So again, as I've explained, the overall trend is in a downtrend. However, the lower high can be expected anywhere between 202 to 218. But we're going to target around 190 to 200 since that's solid psychological numbers. So even if you buy at Friday's close, which is between 190 to 200, and just keep your stop loss anywhere below this level. Though chances are it might not rally, but let's just use this support as our stop loss. You can get a very good 15% gain. And again, with DoorDash options, premiums are quite cheap. So you can buy options for 170 strike price or 180, sell at 200, and you're gonna be in a you're gonna be in $20 profit. I don't know what the premium is. And yeah, that's about it. So hope you guys enjoyed this video. If you want to help me improve my video qualities, my editing style, please do subscribe. Once I do start making money, I can invest in all those things, and then we can eventually build a community. Till then, follow me on X, Johnson Trades at the rate. I'll be inserting the links in the comments as well. Happy trading.